If you haven't already seen or heard from some of my videos, I'm long silver right now. It is my biggest position currently and has been going really well. We got this entry after the kind of break and pull back into this zone. And I've been just trailing stops on this one a couple different times. I've trailed stops here. Now I've trailed stops up to this point. So with this break here today, this morning, I went ahead and trailed stops just below this swing low that we saw recently. So with that, what I'm looking for is I'm looking for further higher highs, further higher lows in order to trail a stop loss and keep this thing running as long as it wants to run, really. I gotta move my mic here, get it in the right spot so you guys can hear me and not get shown the mic too much. There you go. So anyways, yeah, what I'm looking for here is higher lows and higher highs from here just to continue to trail a stop loss on this trade. That being said, this morning we do have some news that's coming out. We have GDP numbers. So I'm just going to quickly pull up Forex Factory just so we can see this. So we have final GDP numbers coming out. Forecasts are for 3%. A disappointment on this front would probably be good for my silver position. And gold would also probably go up on that, etc. And what we're looking at here, of course, with GDP statistics is the idea of how much the economy is pumping out in terms of, growth. Now, with GDP, there is advanced GDP, there's preliminary GDP, and there's final GDP. Today, we are getting the third sort of component of GDP, which of course has the potential to move the markets. The one that moves the markets the most usually, from what I've seen, is advanced GDP. It's the early kind of forecast for GDP. This is the final kind of tallied up figures for GDP. So how would this impact charts potentially this morning? Well, we don't know what the value is going to be. So I'm not going to try and tell you, oh, it's going to go up or it's going to go down. That would be foolish of me to try and say that. What would, however, be worth noting is once we get the data, how could it potentially change the trends or continue the trends that we've been seeing in this market? So a couple of things to think about here is that if we get GDP numbers coming in strong, that's probably going to make the stock market, it's going to kind of be neutral because the stock market's really hyped up on rate cuts right now, which strong GDP figures might hurt that story. But one thing's pretty clear. If you get a strong GDP print, that's going to be good for the US dollar and not so great for metals, which would not be great for my current positioning. And if you get weaker than expected GDP numbers, if we see the economy continue to cool, that would be considered weak for the dollar and strong for metals, which sort of thrive off of that uncertainty. So if we pull up the dollar index just for a second, if we take a look at the daily chart, this is where I'm at with the dollar. The dollar index has been trending down for months now, and in the last month, it's really just gone sideways. This has been a terrible year to be a dollar bull because this year we've just seen trends to the downside as the Fed has sort of made it very clear that they want to cut rates. I mean, they cut 50 basis points to my surprise, as well as many other very intelligent people, many more intelligent people than myself were very much convinced that a 50 basis point cut would be too aggressive and that a 25 basis point cut would be more appropriate to begin the process. That being said, we can't live in the what should have been or could have been. The Fed decided to cut 50 basis points and that's where we're at. So the Fed cut 50 basis points, the dollar continues its downtrend. And the question now is whether or not economic data points like the one we're getting in 7 minutes from now will continue to prolong or extend that downward trend. Meaning if US economic data is cool this morning, we see more cuts coming, the dollar index is probably going to continue to go lower and break through lows. That's why the data points are so important this morning. And that's why, again, I've got a redefined energy or reconfirmed bias towards just how important fundamentals are. I was able to pretty much keep up with the market based on the economic data points while I was in Greece, which is amazing because, of course, you know what I use. I use the Edge Finder. So just by keeping an eye on the Edge Finder, I basically was able to keep tabs on what was happening in the market without spending so much time. I love that about when I go on trips. I can stay locked in on the markets without sitting there staring at it like I do all day usually, right? So every time I go on vacation, I rely heavily on the Edge Finder just to keep me up to speed. And that is one of the coolest features, I have to say. From somebody who is very busy, I imagine many of you guys are as well, being able to pull up a tool that basically just heat seeks what's going on for you is incredible. We got a lot to talk about though on the metal side. Why are they up so much? Well, the answer in my view is China. Have you guys seen this chart? This is the Chinese stock market, which is going parabolic the last few days. Guys, we're talking about in the last 3 days, the Chinese stock market is up like 15%, which is an insane boom going on in China. And I'm not super informed on this, but I know the general idea is that there is some heavy stimulus kind of concepts coming out of China. Basically, the government central bank, they're not very happy with the performance of their stock market, looking to get involved more heavily, which we know from the Federal Reserve as an example is, has a lot of impact on the stock market. If you get a stock market wanting to, get involved, or a central bank wanting to get involved to sort of lower borrowing costs, make money more affordable, that is going to usually cause the stock market to go up so long as the economy is hanging in there.
Market analysis, free trading courses, edge finder data, and special offers. What do these things all have in common? They're all available for you right now inside of our free Discord. You can click the link down in the description below to join the free Discord today and get access to all of this and more. Stay up to date with all the latest trading information and A1 content. And if you want to upgrade to our Gold VIP Discord that features every single trade that Trader Nick and our other professional analysts take, you can find the links for that in the description as well. So don't wait, go check out the free Discord today.
So China has been a beaten down stock market for the better half of a few years now, right? Going back to 2021, where it peaked out here. We've seen just a downtrend. I have played my hand a couple of times at getting long Chinese stocks. I wish I was long them today. I have not. I've caught some really good moves in the stock market bounce that we saw right here. Made some good money on, FXI, the ETF that tracks China. Am I a buyer at these levels? No. But I am very happy to see the Chinese stock market starting to participate. I do think that's also good for the US stock market. We see the Nikkei, a little bit of breakout here, trying to squeeze above this area here. On the S&P 500, we've broken to new highs yet again. Still more strength to come, it seems like. Though I am bullish, I'd like to see a pullback before I get involved. I can't really chase this thing. So this one's left me behind for now. So I'm on the sidelines with that. NASDAQ, same thing, broke through resistance, looking for a pullback. If we can get it, I may be interested, especially as we turn the month from this September seasonality, which did not play out, by the way, whatsoever. Just so unless we see some drastic thing in the last few days of September here, guys, we have seen seasonality get completely rejected this year, meaning usually September is a bearish month for stocks. This year, not so much. So you got to be careful with seasonality, because I personally, would have loved if the stock market came down in September, because I sort of stayed cash and stayed on the sidelines. That ended up being the wrong call with the stock market. Of course, seasonality is a real force and it is a real thing. And some of my best trades ever have come from respecting seasonality, but nothing works 100%. Nothing works 100%. So just because seasonality was bearish for the month of September, that was a part of the reason why I stayed cash heavy. Now, again, I was wrong about that. I wish I was long the S&P 500. It would have been a wonderful, wonderful month to be long. But again, historically speaking, there is a bearish tilt in the month of September. That being said, doesn't mean every month has to be bearish. And this month, the S&P 500 rocketed up another 3.5% or so. So, again, nothing works perfectly. So when it comes to trading, this is why trading is hard. If it was easy as, I just, sell when seasonality is bearish, buy when seasonality. If it was that easy, right? Everybody and their brother would be doing this, and it would be, everybody would be making money from the markets. But we know most people do not make money from the markets. Most people lose money from the markets. So to make money in the markets, you have to look at a lot of different things. You have to do your homework, do your research, do your due diligence, and make educated guesses with small risk per trade. That is what we preach over and over on this stream. All right, guys, got S&P over here, NAS, Dow Jones, dollars right here. You got the euro, the pound, gold, and you got oil in the bottom right, which oil's been getting killed recently. I don't know if you guys saw that. All right, gold coming down a little bit here. S&P, Nas, Dow Jones up slightly. All right, durable goods came in a little better than expected. Final GDP did come in at 3% as expected. Unemployment claims came in better than expected. So arguably some positive signs for the economy, which would make sense to push down things like gold, silver, etc., and should act to strengthen the dollar here. Let's see if that is correct. A little bit of pump on the dollar, not much there. S&P 500 up 0.7%, Nas up 1.25. You got the Dow Jones up 0.5%, the Russell's up 1%, Nikkei's up 2%. China's still up a crazy amount today, 7.8%. I'm curious if we are going to start anywhere. I want to start with the dollar index just for a second to get you guys' thoughts. It's been a bit range bound on the daily chart, but I'm curious. Maybe we'll go to Miko first on this one. Do you have any thoughts on where the dollar could be headed next? I know you were bearish on it for some time now, which has been a great call. Do you think it has more room to the downside, or is it starting to bottom?
I do think we've got more downside. I do think we've got more room. It's having such a tough time trying to head lower because we are hitting some high time frame areas of support. But my analysis stems kind of from the daily, weekly, monthly time frames. That's kind of where I get my narrative from. So I do think longer term, at least based on technical analysis, there is a lot of room for us to fall into, potentially cover some of the moves that we've had in 2022. So I still think there's more downside, but price is finding it very difficult, meaning may push up first before we do have that follow through. But I'm still looking at least a push to this low here, which is around 99.6. So I'm still bearish on USD, but it's just been difficult to get into trades, especially for like euro and pound, because they're just a little bit awkward. So if dollar can push up, that would be great for me. Then I can find some more selling opportunities or buys for like Euro USD, for example. A push like that would be nice, and hopefully a pullback in euro as well. So I think dollar's still got room to the downside, but yeah, it's very awkward to look for shorts at this moment in time.
Yeah, fair enough. I think being stuck in the middle of this consolidation is a bit tricky, and we'll see once it makes a decisive break. I thought it was going to break through the lows here around the 100.4 level, but didn't quite get there, and still sort of chopping back around. This, of course, has implications on like every market, whether you're watching indices or currency pairs or commodities. If the dollar, breaks these lows, metals probably go higher, other currencies probably really rally, etc. So we'll have to see how that plays out from here. Marco, what are your thoughts currently on the dollar?
So for the dollar, just before that, Miko, I think your microphone source is on your PC instead of the microphone. So
is it? Okay.
Yeah, if you want to back out and come back in, Miko, just switch your mic, or you could do it at the bottom. Either way.
So for the DXY on the daily, it is stuck in that consolidation. It had a massive drop right here with some very nice bearish pressure, some very nice bearish legs, but now it's just kind of stuck in this flat consolidation. So I could not really make a decision. I could not really give you a bias. On the 1 hour, it's also stuck in just a flat range. So I would wait for a breakout to the downside or to the upside. I was expecting maybe a bigger reaction on that rate cut that we had. So with the interest rate, a trend did not start. It may start in the future. So if we can break out of these key levels, then maybe we can start an uptrend or a downtrend, depending on how the market will react. And are you surprised that there was no big reaction with the rate cut? I mean, that we didn't start a uptrend or a downtrend?
Yeah, that's a good point. I mean, they cut by 50 basis points, which was to some a surprise. I thought there was, myself included, I thought they were only going to cut by 0.25%. They cut by 0.5%, which, I thought that would do a little bit more to the dollar index. But what it might have been telling you is that the market was sort of thinking we would get a big, heavy rate cut ahead of time. And if we had gotten a 25 basis point cut, what might have happened is you might have just started to see the reversal. So if you had seen, a 25 basis point cut, the market might have been thinking 50 and got it wrong. we saw that towards the Fed Watch tool, which tracks probabilities for certain rate cuts. It leaned heavily right before the rate cut into a 50 basis point cut expected. And what that tells you is that basically the market was sort of priced for a 50 basis point cut at that time. So I think that's why it didn't sort of have a big explosive trend lower. But now the question is, with the rate cut side of things, if we get more economic data, let's say a very weak NFP report like next week, or if you get that sort of environment, the dollar then could very well pick up a downtrend and continue. Then it's like, okay, we're going to get rate cuts and way more rate cuts because the economy's starting to slide. I think now it's very much, coming down to like jobs data, et cetera. If we get strong jobs data, the dollar index might bottom out and find a low, but kind of comes down to the data on that front. In terms of price action signals, I'm with you guys. I think if we could see a break through this low, that might start a bigger trend lower. But to be fair, if we see, conflicting data and the market starts to rally, very well could be finding a bottom. So I'm very neutral with it currently. There's not a lot of setups that I can see at this time. I guess where we have seen some pretty big moves, I've been long silver. I'm not in gold, but I'm curious, Miko, what are your thoughts on gold or silver, either one?
So yeah, it's been pretty bullish with both of them. I've had a couple levels marked out with gold, but it just hasn't retraced enough for me. I remember we had the break of 25.30 around here. Then we had another break of this high as well. And gold was just ripping to the upside. So I'm finding it difficult to look for entries unless I scale right down to some lower time frames. I might have better luck, but it's still kind of just pushing high. And again, this afternoon as well. So I think with gold, in terms of the technicals, it's just a very bullish market. If you're looking to trade it, you're looking to get in some pullbacks, shorting it, it's going to be very, very difficult. So in my opinion, if you're looking at this, especially in the lower time frames, break and retest can work very well in these conditions. And you're just looking to try and anticipate those higher lows because there's just so much momentum with gold. In terms of silver, we're seeing a similar movement. However, silver is coming back into like a big daily high here, so you might find a little bit a bit more difficult. But in terms of opportunities, I like silver because if we can get a strong break of this daily high, that opens up the opportunity for some more buys on top of that level. So I'm liking silver. I think gold might miss the boat on that one unless we go for a bigger retracement. If I can get break and retest on that and silver, that does interest me a lot. But I'm very bullish on both of them. Technicals look very bullish, so I'm expecting more of the same.
Okay, fair enough. And so, Miko, if you could try one more thing on your mic too, I think it might be your gain might be very high or something.
My gain?
Yeah, you sound good, but I think your mic is just sensitive right now because people are saying they can hear like a microphone noise when you hit the desk or something. I'm not sure, but just technical difficulties. It's part of the content creation component. Marco, same question to you. Silver, gold, metals, any thoughts here?
Looking very interesting. Very interesting. Gold finally broke out on the daily. So that's good to see. At least it's moving. It was pretty corrective right here. So the technicals were telling me it's kind of exhausted, but now it's starting to pick back up again. And it's just no signs of slowing down on this daily chart. Silver approaching this major high, which is a bit of a problem in my eyes. So I do prefer gold because it's just kind of doesn't have anything above any interference. But silver is moving up as well. You could say it is reversing from this descending channel, which is a known structure in a high probability pattern where I expect the price to actually reverse from this sort of a structure when it's correctively breaking the lows. So they are connected. They're going to go up together. But I do think gold, in my opinion, is looking a bit more healthy because it's just no highs are there to stop it, if you know what I mean.
Yeah, that makes sense. And yeah, gold has just been a, on a recent basis, silver's looked a lot uglier in terms of a chart in my view. But the recent, Fed rate cuts you talked about triggering some trends. I've seen silver really change its tone because of the cuts, because silver and gold are both very sensitive to whether or not rate cuts happen or not. And silver is it's like gold. It's like, one thing I always hear people say, or I've listened to somebody say this many times, Bitcoin is like a chart that represents buying calls on the Nasdaq. Silver is kind of like buying calls on gold. And when you buy calls, if the market doesn't rip or just stays where it currently is, you still lose money. So that, but if it goes up, you stand to make a lot more money, right? When you introduce options into the picture, part of the reason I personally dislike buying options is you have to be not only right in direction, but right in the timing. I personally love to sell options for that very flipped reason. You don't have to be right on either one. You can still, make money. But the point that I'm trying to get at is like when you go long silver, it, as you've mentioned correctly, it has a very high correlation to what gold does, but the magnitude of its moves is higher. The volatility is higher with silver. And so these moves on a percentage basis can be much bigger. So this recent push, I made this point just before you guys joined, this recent move on silver is about an 18% gain from the low to the high. And on gold, it's about an 8.5% gain. So you can see that the explosiveness of silver when you're right can be great. But ultimately, the price you pay is sometimes you get these really choppy environments. So yeah, it's tricky.
And how did you exit your gold position?
I got trailed out. So I
cool.
forget exactly when this happened. I think it was over here, unfortunately. But the good news is at that same time, I liked silver better anyways and flipped into getting long silver instead of gold. So I pretty much picked it up on the same day I got trailed out just because I still liked the setup, but silver I thought had more potential, and I was right about that. Where I've been wrong is I've been missing the indices, which is like the bane of my existence and the most painful thing for me to miss because I love trading them. So anyways, next topic, I guess, is currency pairs. So we've talked a little bit about the dollar and metals a good bit here. Miko, you first in terms of currency pair setups. Are you seeing anything on the euro, the pound, the yen, wherever you'd like to pull up?
Yeah, so at the moment I am short on pound JPY. I've taken a short on Tuesday. Yeah, it was Tuesday. Off this high. So I'm pretty bearish on the yen pairs. I'm looking for some big reversals for them there. Most of them are approaching some big highs on the daily, weekly charts. I'm looking to anticipate a bit of a reversal. It's more of an aggressive position, but I'm not expecting us to break high. If we do, then I might be in the wrong direction. But the idea is that we've had such a big sell-off a couple of months ago, and I'm looking for a continuation of that. And now that we've hit back at a strong area where sellers have stepped into the market previously, I'm looking to see if we can see that reaction again. A lot of the yen pairs are approaching some of those levels, Aussie yen as well, hitting some nice heights there. Again, I'm going to just stick with pound yen. Not going to look to trade all of them, but they're all coming into some nice areas. So I'm being very bearish on the yen pairs. I'm just picking which one looks the best at the moment. Pound yen tick the box as well. So I'm currently nursing a trade there. I'm also very bullish on the euro, on euro USD and the rest of the majors as well. But I need some pullbacks with these guys, and of course, dollar's been a little bit choppy the past few days, so it's been difficult to get into entries. But euro, I like the longs. Pound USD, I like the longs as well. And the USD is another one which I like the longs, but I'm not too sure if I'll get the pullback after. I'm looking for the retest of this level here on the USD around 0.62. Pound USD, I'm looking for the retest of the high there as well. Not quite there yet. Euro, I don't have a clear setup yet. I like the low back down here, but I'm not too sure if we'll get the pullback there I'm looking for. So my main kind of focus is shorting the yen pairs and looking to see if I can get some pullbacks on some of the majors.
Okay. Yeah, no, I kind of like that. I think some of the yen pairs could be, especially the higher sort of risk-on currencies like pound and euro, could actually be some interesting setups. If you get any sort of, like if we just take a look at the index, for example, the NASDAQ, right? This is a good indicator of bullish sentiment in the markets. Same thing with Bitcoin, right? These things have had really good runs. And it is natural for, when people get very overly bullish for a time, for that to sort of correct. And so when we go to the yen currencies, I kind of always think the same way. Pound yen and the NASDAQ have some similar characteristics. They both typically rally in good times and sell off hard in negative times. I'm a little bit cautious on the indices myself still. And so when we do see them all rallying, if I'm going to look in the currency world, my bias would probably fall in the same line of like, okay, maybe I want to look to maybe get short some of the yen crosses that I think may be a bit overextended, especially on economies that I think, may roll over a little sooner than others. But yeah, no, I like that idea. Pound yen, very interesting chart. Same thing for you, Marco. Do you have any currency setups that are looking good to you?
Yeah, so Aussie Japanese yen is looking extremely clean,
Okay.
to short actually.
All
So it's
right.
producing a very high probability pattern, which I rarely see. This very clean ascending channel, and it's breaking the highs and retracing all the way from here. 1, 2, 3, 4, 5, 6 breaks of the highs, no breaks of the lows. And usually you get a big downtrend after this sort of a formation. So I will be very interested to look for a push down and then a sell setup. It'll just be, it'll have a very high profit expectancy, and these setups usually have a high win rate as well. EJ is telling me the same thing. It wants to go down. At least the technicals are telling me that. It's just breaking these highs very correctively and retracing, starting to print some bearish pressure, but it's not enough. It's not convincing enough for me to look for a short just yet. So I'm being a little bit more patient, looking for a drop. NJ is not looking as clean as the Aussie and the Japanese yen. It is correctively breaking the highs, but it's a bit more of a messy structure, so I'm not seeing that high probability pattern. But I am expecting for it to drop down as well. So we'll be looking for shorts when I get the signature, when I get the confirmation. Look for something like this. Dollar pairs, Euro US dollar for me is pretty flat in this area, not producing any high probability patterns. Aussie US dollar is starting to print some bullish momentum in this very short term price action. So if this can continue going up, I will be looking for buy setups, but my confidence is not that high, to be honest. So being careful with Aussie US dollar. Pound US dollar is looking pretty indecisive as well. You had a big drop down after this sort of a large ascending channel, but unfortunately it could not be sustained. So it started to print some large bullish momentum, which makes everything a very indecisive, I would say. So my main focus is going to be NJ, it's going to be EJ, and it's going to be the Aussie US dollar on the watch list. That's the game plan. So today, maybe we can get some nice short setups on the JPY pairs.
Did you know we do a live trading show Monday through Friday with guests from all over the world? To get notified when we go live, click the bell button next to the subscribe button or check in at 9:30 a.m. Eastern Time. We have helpful, free content in the description below and on our website, a1trading.com. Thanks for watching today's video, and we'll see you tomorrow.